What is up, guys? My name is Hassan and welcome back, everyone. As you guys know that this is a dividend growth portfolio where I care more about my monthly income than my capital appreciation or gains. So today I'm going to be showing you guys my buys and sells, what I've been making for the last 1 month. The reason why I do this is because I want to be transparent and clear with my viewers. In other words, I'm not a person who only talks about investing, but I actually do it. That's why I show you guys my whole portfolio and everything I've been buying and selling. As always, before I begin, I have to give you guys a quick disclaimer. I'm not a financial advisor, nor do I know your personal nor do I know you personally or your personal or your financial situation. I am not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence. And just to remind myself and everybody else not is pretty much don't follow people you see on YouTube or online or a tip you get at a party. You should always do your own due diligence before putting your real hard-earned money into the market. All right. So in the last 1 day, I'm pretty much down about 90, almost 1%. And then for 1 week, I'm up about 0.6%. For 1 month, I'm up about 3%, and then for 3 months, I'm up about 2%. And you can see these numbers. These numbers were right here. All right, so I want to quickly compare my portfolio with how the market was doing, even though it doesn't really matter because I don't care about my capital appreciation. I care about my monthly income. But let's take a look. So we got the S&P 500, which is the index. 1 day it's down about 0.1%. 5 days it's pretty much or even, and then for 1 month, in the 1 month, let's see. Yeah, so in the last 1 month, S&P 500 is up about 1%, which is okay. It was pretty much because all that trade war, all that craziness going on in the market, which I don't let it get to me or bother me because it gives me an opportunity. Like for example, it gives me opportunity to buy all these dips. So S&P 500 was up what 1% we saw in the last 1 month. Let's just double check. Yeah, and if you compare it to my account, in the last 1 month I was about up 3%, but 3 months I'm only up 2%. With this does not count the dividends. All right, let's get to my account. So this is just quickly show you guys orders here. You can see all my buys and sells for month of May. Like Abby, VET, Nokia, more of Nokia, PBA. So I just put all these sales into an Excel sheet. So I just want to show you guys quickly. So in the month of May, I put in a total of $655. You can see that directly on top right here. And if you look at it the last four months, my average cost is about $496. And the reason that's my average, but last month I put in with 655. And the reason why I'm trying to add as much money as possible is because I want to compound. I want the compounding to start as quickly as possible which will then result in increasing my monthly income. And another video I'll show you guys how much I make on a monthly basis. So let's get to my buys and sales order. So waste management, I bought 2 shares on May 1st at average cost of 105.92 cents. Then the reason, you guys, I already made a video on this. It's a great company. They're doing all the right things what a company should be doing. Like, for example, their waste management is buying back their shares, they're paying off their debt, and they're growing their company, and their sales are increasing rapidly, and they're holding a lot of their customers, retaining their customers. Macy's, I bought 1 share at $23.72. The reason why I'm buying Macy's is because it's totally undervalued. Even like, I think it has a market cap around 7.6 billion, but it's real estate. Recent article shows that it's at least around almost 20 billion or 16 to 20 billion, but its market cap is 7 billion. Cliff, if you've been watching my channel, I've been swing trading this company like crazy. The green means it's positive. I made it for a profit. Red means I sold it for a loss. MDR, I'm looking to swing trade this. $7.94. I bought it for each share 6 shares total. Again, PBA, Pembina, my monthly dividend company. I bought 1 share at $34.92. Again, I bought more waste management. I will have a total of, I think, if I go back, let's see, I have waste management. I have a total of 8 shares. You guys can see that, 8 shares. And I actually want to add a lot more to it, maybe 10-15 shares total, but it just keeps going up. And then I got VET, my monthly income, bought 4 shares at $23.17. Nokia, this is my 5G play. I bought 5 shares. The reason why I'm buying Nokia is because of 5G. I think 5G is going to do really well, and Ericsson and Nokia is going to play a big role in it. So I bought Ericsson, 3 shares. ENB, it's a dividend company, 1 share. Abby, 2 shares. It made a major dip, 75.90 cents at each share. NWL, bought 2 shares. I don't know how I feel about this company. They have a total or a huge amount of debt, so I might sell this. PPL, not a lot of people talk about this. It's a utilities company. Check that out. More of Macy's on May 14th. 1 share, $21.50. If you notice, Macy's, as it keeps going down, I'm averaging down, acquiring more shares. HCLP, one of this high crush, one of my worst companies ever in the stock market. Stay away from it. I don't even know what I'm going to do with this company. I sold 15 shares just to reduce some risk. IP, good company, has high debt though. 2 shares at $42.70. Water, some water company. Bought it on May 23rd. 1 share at $39.45. Again, waste management, saw an opportunity. $107.97, so pretty much $108. Bought more of Macy. Sold Snap because I'm changing my strategy, going more into dividend investing. That's why it hasn't, pretty much, I've been holding Snap for almost 2 years, and this company has not made me a single penny. All it does was the value went down. I just held it. I got stuck holding the bag, and I don't like doing that. So that's why I'm more focused on my dividend company. Even if I hold it for 2 years, they're still going to pay me 3%, 4%, maybe 5% of their dividend. Remember I said this Ericsson, Ericsson is my 5G play. And then I bought Nvidia for 1 share, averaging down for $140. So I think Nvidia is going to do really well, even though they're not paying much dividend. But in the long run, I see them increasing their dividend. So I want to cover, at this point, I want to cover a question. And the question is, it has to do with dividend related. So we always do our taxes. So my question is, how are dividends taxed? One of the main reason why I like dividend income so much is because they get taxed at a lower rate. For most people, their qualified dividend is only at 15%, which is very little compared to your short-term capital gain, which you get taxed around 25 to 35% based on your bracket. And getting taxed at 15 versus 30% is a huge difference. So like for example, let me pull out my calculator. Say you made a total of $1,000, and if you get taxed at, say, short-term capital gain is, say, about 30%, that's $300 that you might have to pay back on your taxes, versus if for your dividend, qualified dividend, if you only get taxed around 15%, so which is only $150. So pretty much double. You're paying with capital gain. I'm pretty much paying double in taxes versus my dividend, which is about 15%. So there are two types of dividends. There are qualified dividends, and then there's unqualified dividends. Qualified dividends usually get taxed around 15%, and non-qualified dividends, on the other hand, gets taxed at ordinary income. So based on whatever bracket you're on, if you're on 15%, 30%, 35%, 37%, wherever your income is. And in order for a dividend to be considered qualified, it has to meet two criteria. First, it has to be a U.S. corporation or it could be a foreign corporation, as long as it is listed on the U.S. stock exchange. And another thing is that it cannot be a REIT or real estate investment, because REITs also gets taxed at ordinary income. So first one is that it has to be, in order for it to be a qualified dividend, it has to be on the U.S. stock exchange. Second, you must have owned the stock. That paid you the dividend for more than 60 days within the holding period. This requires the shareholders to be at least somewhat long-term oriented. Hence, the dividend capture strategy is not so great, or it's not fruitful, because you end up getting taxed at an ordinary income. Alright guys, that's pretty much it. I just wanted to explain my qualified versus unqualified dividend. As always, thank you. If you haven't subscribed yet, hit the subscribe button. Thank you. See you next time.